Okay, welcome again. This is lesson 4 in this little mini series of how to trade futures and forex contracts. We're going to cover some advanced money management techniques now. Remember, we have the CFTC notice, and let me get right into this. The business and trading plan we talked about is our recommendation is you trade only one market and you learn it very, very well. I mean, whether you want to trade corn futures or wheat or Forex or the E-mini or the Russell or the Dow or whatever it is, we picked the E-mini largely because it's the most volatile, the most liquid, and it is easiest to learn. Unfortunately, if you're in another country, east or west, you might need to work on Forex or your local index. We have about 700 students around the world that trade everything from soup to nuts. So we're talking about trading only one market. One of the things about money management, if you took the Van Tharp trading game, you'll find out that you really want to risk only about 2% on any one trade to be conservative. And now what's nice about that is that means you can take 50 losers in a row before you bust out. Now if you have that many losers, you ought to quit. But our rule is that you should trade no more than about 3 times a day. This forces you to be patient and disciplined and take only the best high probability trades. Another rule we have is if we take 2 losers in a row, we quit for the day. If we have 2 losing days in a row, we quit for the week and go back and figure out what the heck happened. You can't always tell, but sometimes you develop very bad habits that you need to stop and reset yourself immediately. The other thing we believe in, you're making money, is you should take about half of the money you made that week out each week, because that way you feel like you're in a real business, you're making money, and you're getting paid for what you're doing. Now, these are studies done by Futures Magazine, Stocks and Commodities, whatever. They've done studies on day trading, swing trading, not positioning trading, because that is really investing. But if you look at the numbers here, day trading seems to have about 293 winners to 59 losers with an average dollar per trade profit of $5.29. Swing trading is just the opposite. Now the reason is, if you go back and do a little study, you'll find out that 90% of all the increase in the market over the last year and a half, this is June 2010, have come from overnight trades that are either up or down, that are unpredictable, unless you use tick charts to track the trades. So I don't really swing trade. I went from investing to swing trading to day trading to minimize my risk, and that's part of the reason we do that. Now the other thing, if you look at the amount of time in the trades, it's 18 to 2. That's a 9 to 1 win to loss ratio on 0 to 5 minutes. You don't make a lot of money, but you get a lot of winners. What you really want to do is get a lot of winners and a lot of money, and 5 to 15 minutes seems to be about the average swing trade in a day trading environment. So that's basically kind of what I focus on. And that's 5 to 15, that's about 4.5 to 1. That's a very nice ratio. 16 to 30 minutes is nearly as good, but generally as you get later in the day, and you'll see in the next slide, you start to make less and less. Now when you get down here to 30 to 60 minutes and some of these larger numbers, one of the real challenges is that you get such large drawdowns in these time frames that it makes that risk higher than you might want it. So I've just tended to focus on a much shorter time frame, and you do 3 trades, you work for 45 minutes, and you're done. Now another study done by these same magazines showed when the best time and the most profit is made. And you can trade the pre-open, and that's a pretty nice time. I have a trader in Chicago that can't sleep, has insomnia, gets up and trades at 4 in the morning, and takes his trade and goes to bed and doesn't even have to trade during a day. But 9:30 to 10:30 seems to be about the highest time and the most profit. I mean, here you're getting 4 to 1, about an 8 to 1 win to loss ratio with $1,000 a trade made. just from 10 to 10:30. Now these times switch back and forth occasionally, but then after 10:30 most of the action goes away, although at noon there's some really big profits to be made, but they're very unpredictable and they don't occur very often, so we stay away from that. We do look at the 2 to 3 o'clock time frame, and we find that again is one of the highest profitability times. So you can trade in the morning, you can trade in the afternoon, you can trade the overnights, but sometimes you'll need full margin as opposed to partial margin. Now, here's the way I learned to do a couple things. By looking at how I traded, I used to be a greedy little guy, and I would always jump the gun, and as soon as I got in, the market went against me, and then when I got a little bit of profit, I'd get out early. Okay, now that basically means that you are greedy and working from the greed side. The one thing you got to do here is admit this to yourself. The second thing is, if you're in late and out late, that means you don't believe your system. So I had to develop a system that gave me an early entry signal and an early exit. So signal 1 in the systems we use are an exit signal that you should either exit, take half off, or move your stop. Okay, signal number 2 is a non-lagging indicator, and we'll show you a diagram of this in just the next slide. That does not lag the market, and there are signals that do that. The third is a confirmation signal that says yes, it really is going to go in the direction it goes, and then you have to test that. Okay, and we did, and we found that this 1, 2, 3 system works about 70% of the time and puts the odds in your favor. That still means you're going to get 30% losers, and you've got to take the signals when they occur. And finally, the fourth part of advanced money management is evaluating the potential for a move. In other words, if you're right at a pivot point and the market looks like it's going to go up, then you're probably going to head for the first resistance point. Okay, you've got to make that decision on a longer time frame. But let's talk about how these signals work right now. Now, this is basically a triple stochastic system, strange settings you wouldn't find for yourself. We did about 200,000 tests to find the signals that work, and we use this as training for our triple derivative indicator down here. Now, you see that the arrow prints, and that's a little blue vertical line. That is right at the time, and it is 1 bar early from the next signal. The second signal is the color change down here, or the turning of that very short-term stochastic. If you get in a long trend, stochastics and oscillators don't work. So the bottom indicator is both a momentum indicator and an oscillator. So you can see that pretty much mirrors the peaks here, but not exactly. And then the third signal is a confirmation with a moving average. So if you get 1, 2, 3, you get in here at 1357, and you get out on the arrow at 1353. Now that's a 4-point move. 4 points out of out of a $500 margin will give you about an 80% return in a very short period of time, here from 512 to 522, about 10 minutes. So remember, we're looking at the 5 to 15 minute time frame. Now, what we want to cover next is the mental management of your trades. Do you believe your system? Will you trade it? How do you get over the issues of pulling a trigger or pulling a trigger to what I call shotgun mode and revenge trading and things like that? So Bill, talk to you soon.